Hello everyone. Today we're going to have a brief market recap, then talk about today's UK public sector borrowing, US existing home sales, and the weekly US oil inventory data, among other topics. This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my daily market comment. The dollar is generally higher this morning as the rise in dollar-yen pulls the US currency up against most other currencies as well. Eurodollar made a low for the year as EU corporate demand for euros recedes into the year-end. Now, sterling was particularly weak after Scottish First Minister Nicola Sturgeon presented a plan to allow Scotland to keep the benefits of EU membership even after Brexit. The plan actually makes it more likely that Scotland would eventually become an independent country. As for today, there's not that much on the calendar. UK public sector borrowing isn't normally a major market mover, but I think investors are now more interested in how the fiscal monetary mix is going in the post-Brexit era. Now, UK Chancellor Philip Hammond has cut back on his predecessor's pledge to bring the budget into balance. So a looser fiscal policy would allow for a tighter monetary policy, and that would be bullish for the pound. We could see sterling recover some of its losses today. EU consumer confidence is expected to be little changed. In any case, this is only a second-tier indicator with not that much impact on the exchange rate. U.S. existing home sales for November are expected to decline in line with the downturn in housing starts and permits in the month. But the National Association of Home Builders Index was unchanged during the month. This suggests things might not actually have been that bad. There's the possibility of an upside surprise from the figures. Oil was up overnight after the American Petroleum Institute report showed a big drop of 4.15 million barrels. Now, drawdowns are normal this time of year, but the API figure was a larger drawdown than expected. The market had been looking for a decline, or is looking for a decline, of only 2.5 million barrels from today's Department of Energy figures. The rise in oil prices came despite Libya reopening 2 major fields and restarting exports from its largest export terminal. Finally, New Zealand will come out with its third quarter GDP figure overnight. Growth is likely to be somewhat slower on a quarter-on-quarter basis, but remain the same on a year-on-year basis. The New Zealand economy has been doing fairly well recently, and news like this may make it less likely that they need to cut rates to boost the economy. It may therefore prove supportive for the Kiwi. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.